Welcome to another video. My name is Nick and I'm a top author on TradingView with over 260k reputation points. And here in the Transparent FX Academy, every day I share new free education and analysis. So make sure that you subscribe and I will see you on the charts. In today's video, I will be speaking about USDCHF. First, from a technical perspective, we will then go and see what we have when it comes to the order flow, so what hedge funds and the non-commercials in the market are doing. And by putting together these two different types of analysis, we will try to understand where we have the highest probabilities for a potential move here on the pair. We're also currently running the Black Friday month promotion. You have a massive discount for the mentorship program and also the possibility to get a full refund credited directly in your trading account, since we have partnered with the forex broker Blueberry Markets, and you find the link to that in description. It's never been this easy to join, so I suggest you check it out. Now, starting here on the monthly time frame, what do we have? Now here on the monthly, we have a market which so far has been printing higher lows when it comes here to the monthly price action. Starting from this low, we had the first move to the upside, then a new higher low here, another higher low here, and another higher low here. And in a situation like this, what we can expect is for the market to provide another rejection to the upside, possibly printing finally a higher high as well. And in that case, that would trigger an uptrend because clearly we had here an inverted head and shoulders, and the creation of a new higher high would basically start putting in motion the creation of new higher highs and higher lows, which are obviously the definition of an uptrend. So on the monthly, everything seems quite bullish. Dropping down on the weekly time frame, what do we see? Now here in the weekly, we can see that at the moment we are testing quite strong historical structure for this market. In fact, this area was acting as resistance here, again resistance here, again resistance here. The market broke it to the upside. Then here we had a fake breakout, and currently we're testing once again this demand and support area that we can expect the market to reject to the upside. Just a quick thing, make sure that you like the video, subscribe, and let me know in the comments any suggestions for new videos. Dropping down on the daily time frame, what do we see? Now here in the daily time frame, this is where things get very interesting. In fact, we can see first of all that this area is strong demand and support. It was acting as resistance here, also resistance here, and resistance here. The market then broke it to the upside, and at the moment we are retesting it as demand and support. However, we can also notice that in testing it, the market is also printing this M pattern. And in general, after the creation of an M pattern, what you want to see is the market create a move to the upside to go and complete the pattern at the previous support turned resistance. So here in the daily time frame, what we expect is for the market to create a nice move to the upside to complete the pattern at this previous support turned resistance here when it comes to the daily time frame. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds and the non-commercials, so the biggest speculators in the market, are doing, what we can see here is that lately net positions have been dropping. Currently, we're sitting with minus 11.3k net positions, meaning that from an institutional perspective, we have more shorts than longs. In fact, we currently have 17.6k short positions and only 6.2k longs. So the CHF at the moment is definitely quite weak. So a weak CHF should obviously fuel USDCHF for a potential rejection to the upside, meaning that as we have already identified by looking at the technicals on the monthly, weekly, and daily, there is a potential short-term longing opportunity here for USDCHF to see the market create a move to the upside and complete the pattern at this previous support turn resistance, which is our first upside target, neckline also of the M pattern, and completion zone of the pattern itself. Now, The way in which we will be approaching this potential short-term longing opportunity is with students is usually being reactive and not predictive. The monthly, weekly, and daily combined with the CO2 data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4-hour and lower. Therefore, with students, what we will be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we have and we will have to an intraday bullish market. And as soon as the market will shift from an intraday bearish to a bullish market, at that point we will be adding USDCHF to our watch list. And as soon as the market will provide to us one of our valid entries, we will be looking for a potential long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete the pattern at the previous support, turned resistance here from a daily perspective. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free education analysis for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you get a new daily market breakdown every day showing you how to apply the strategies in actual real market. And you also get your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description and I will see you in it.